Ladies and gentlemen, dear traders, I would like to welcome you all in our weekly trading session today. My name is Thomas and I'm an analyst and a trader with OLYMP TRADE, and I've been trading and working with the company for almost 8-9 years. More than 8 years, right? Almost from the get-go, almost from the very beginning of the company. Now, I walked a pretty interesting path in terms of my career development and also my personal development as a trader, and that's why I'm sharing some interesting insights today with you. I would be very, I'll be very grateful if you, if you wanted to share some thoughts or opinions in our chat. So make our trading seminar more like a dialogue instead of just my monologue. Maybe have some stories to share. Maybe have some thoughts, some analysis, and I know anything that you feel relevant to the current session. That would all be highly appreciated. All right, so let's begin. Will you be trading FTT today? So no FTT trades today. FTT trades, we basically have the remaining 4 days of the week, like Tuesday, Wednesday, Thursday, and Friday, obviously, for FTT trading. So please join those trading sessions. Today, on Monday, we usually do some form of a market review, market report kind of day, and I also talk about interesting stories which are coming from the markets. And today, the special highlight of today's webinar is going to be the story of the story of Crash 300 index, which is a very interesting index. And recently, I've been trading it, and I've managed to find some very interesting patterns that work, and I will be very happy to share them with you today. Even though this instrument requires a little bit of caution in terms of how you use it, but at the same time, it's a highly profitable, highly volatile asset, and that's exactly what we need when it comes to Forex. Well, first of all, before we jump into Crash 300, I want to talk a little bit about my positions, which I opened. When did it happen? I opened, wow, yeah, so that's like 3 weeks ago. Yeah, 3 weeks ago have passed, and my Euro USD trade with the multiplier of, is it 100 here, or yeah, that's 100 exactly. So my 100% multiplier trade is doing quite fine, and I think now the time has come to move the stop loss a little bit towards, a little bit closer to here, so I don't really need to sort of like keep it here. I'll rather pull it closer to the current price, right? Because if this trend reverses, then basically this level of support will be breached, and also other ones. No. Now, my take profit is still here, a little bit below, a little bit under 1.10, which is a strategic psychological level, and I don't think I want to close my trade before that. I want to sort of stay in this trade so that my take profit to stop loss ratio will be somewhere around 7. So my take profit equals 7 stop losses, which is a great ratio, something that I always kind of suggest that you use. So right, next story, Bitcoin. Right, so I'm still, well, as I said, I still remain, I mean, what's the stories, right? What's the main driver for Bitcoin? The main driver is basically that everyone is kind of anticipating this ETF, this exchange traded fund to arrive, to sort of start trading on the exchanges, mostly, well, basically, yes, American exchanges like NICE and NASDAQ, I think. Not sure about where it will be traded, but that'll be a very positive news for Bitcoin and other crypto assets. And basically, yes, the story is this: buy the rumors, sell the news. That's kind of, that's what we usually want to do. Even though, well, to be honest, I don't know, when you like me, I've been holding these positions since like 16,000 and 20,000, so basically since here, and I'm kind of now, what's it called, how they say it, like I'm kind of married to this position, right? I'm married to this trade, and that's a little bit of a problem, so it'll be a little difficult for me to sort of exit these positions because I still think that we can still travel pretty much all the way up to like over 50,000 at least. It's at the smallest. Why? Why is that? Well, because if you look at it, where we started off at 20,000 and we haven't even doubled yet. So the price since 20,000, sorry, has not doubled yet. Now, as we look back at the previous kind of wave of growth, so we went from 10,000 and even less, that was like kind of almost 4,000, like 5,000. So 10,000, so 6 times. We still haven't done the double. So I don't know. It seems to me that Bitcoin has a lot of potential, and now at this price, it's kind of easier to move the price further up because I mean, like if now Bitcoin rises by 20%, if it goes up by 20%, that'll be plus 7,000. That'll be like 45,000, and that's kind of so near. So especially if you are holding from somewhere here, then you always wanna hold this position, like such positions, for a little bit longer, hoping for this extra profit. I don't know. A lot will depend on this, whether we will breach the 38,000 level. I don't know. It's kind of when you do this buy and hold positions, and you sort of hope to stay in this position for maybe a year or two, and then when it kind of goes up, and then you start thinking, okay, maybe maybe the time has come to sell. So I don't know, but in my opinion, all the fundamentals are for Bitcoin now, even though we don't have these kind of screaming news or breaking news, except this ETF story, ETF thing. At the same time, we see that, I mean, look at the world now, right? Let's have a look at the world around us. Basically, we are becoming more and more digitalized, right? So digitalization is happening right in front of our eyes, and yeah, I mean, like, what will be popular in future, right? What will be trendy in the future, right? Well, basically, digital assets, right? And Bitcoin is basically the main representative of these digital assets. So, I mean, it doesn't seem like it's too late to enter now, even though we haven't seen this pullback, but it looks like all these dips that are happening, they are being sort of bought out rather quickly. So when it drops and then immediately, boom, goes up. It drops, goes up again. So, well, so far it seems that we still haven't seen the highs, right? So we saw this. Well, at the same time, it's 1, 2, 3, 4, 5, 6. It's kind of like the 7th wave of growth, and I don't know. So you don't really want to sell too early, and I mean, yeah, given all these fundamentals, it seems that we can go somewhere to 60,000. Like, it's not, I mean, like, given the amount of money that we have in the world right now, right? So the money that has recently been printed, and all that printing basically leads to, money has to go somewhere, right? It cannot be absorbed by the financial markets endlessly. I don't know. Right. So done with Bitcoin for today. Holding my position on Dogecoin, which is a more kind of a more like a mid-term position. It's kind of okay. So let's use market terminology. It's a swing position. I bought it here. I'm still holding it up until now. Cardano, I'm only making plus, it's like plus 20%, right? The multiplier is X5, so it means that I'm making plus 20%, which is a nice investment. And as you can see, so a lot now will depend. So we are either going to see the head and shoulders pattern, or we are going to see this breakout, breaking above price, breaking above the 0.40. So 40 cents. If it happens, then basically price will go up. Okay, gold. I don't even know why I have this. Let's just close this trade. That's a trade of $10. I don't even know how I got here. I don't open trades of $10 on Forex. I don't know, guys. So, right, guys. Do we have any questions? Explain directly psychology. Well, that's a good topic for discussion. Unfortunately, I do not have time for, because it's basically, it needs like the whole webinar on this topic, and I suggest that you search for such a webinar on our YouTube channel, because we definitely do have a few webinars completely dedicated to this topic. That is 100%. They should be somewhere in our recordings. Now, let's have a quick look at Brent, because it directly concerns our trading session today, right? So, what happened last week? Last week on Friday, was it Thursday? I think it was Thursday, right? So on Thursday, the price of Brent dipped under 80. So $80 is a strategic psychological level, and we saw that before it kind of sort of withheld the seller's pressure here, and there was the little bounce, pretty nice bounce. I mean, it's like +4, almost +$4 from here, from 79. So yeah, like +$4.50, and then we dipped again below 80, and then this was like a quick thing, and so this now looks like the so-called bear's trap. It means that when usually some strong especially psychological level gets breached, and many people start selling into this breakdown, because many people expect that there will be further drop in price, and well, it didn't happen. It didn't work like that. So price went below 80, and now we are trading above 80. Right, and yeah, that looks like a nice pattern. And I think now we have a little bit of momentum now, because many people so far have been short selling this asset, and I mean, there are a lot of there have been many short sell positions accumulated, and yeah, I mean, now it might have a little bit of upside potential here. So okay, so shall we open some trades? Yeah, so I think that we still have time, right? The momentum is there. It's not too late to open trades, and I think that's what I want to do. Yeah, I want to go ahead and open a few trades. Multiplier 20, that'll be my maximum. So since like recently some of my trades have been going fine, and I have some extra profits which I can sort of reinvest with my more maybe risky trades. Now, something else that I want to talk, another trading idea that I want to share with you today is obviously this one, the pound. And as you can see, the pound, the Great Britain pound, has pretty nice momentum, and this double top formation, which is a pretty classic one, right? So 1.250000, that's another strategic level, right? Psychological level. All round numbers are usually strong psychological levels, and I think that here we have a nice opportunity to sort of short sell this asset. So this definitely looks nice. I've already talked about the euro against the United States dollar today, so my goal is a little bit below, a little under 1.10. I don't see that much, like I don't really wanna, I don't want to sell, to short sell this like really strong uptrend, which I can actually do, but I know it won't be like a very like smart move now against the very strong trend. So maybe if there is no break above the 1.10 and price will have slowed by then, maybe then I will short sell. Also have a look at the RSI. It's not really divergence. There is no divergence now, right? It's not forming because basically the chart is moving upwards and RSI follows. The RSI follows, and it's not like the chart going upwards and the RSI like drops. No, they both go they are both moving in the same direction, which is basically called convergence, right? So there is no divergence, and the RSI is not really signaling. It doesn't signal any sort of trend reversal right now. But we'll see. We'll see what happens next. So there was this long downtrend, breakout of this. So the downtrend was broken. Now we are uptrending. And I think a lot is helping Europe now. This, once again, the second one in a row, pretty mild winter. I think this winter so far has been even milder than last winter. I think because last winter, I think October was really cold, and well, pretty much the European countries are so much dependent on natural gas supplies now. And yeah, I'm looking at this weather forecast. So far it doesn't seem like a cold one, and yeah, I mean, so Europe so far is doing fine, relatively fine. That's why the euro is going upwards. Now, right. Can you please describe Bollinger Band strategy? Well, yeah, we can talk about Bollinger Band's strategy a little later once I start my crash 300 explanation. So, guys, let's have a look at the crash 300 index and why I like it so much. Now, as I said, this index is very volatile, and since it's so volatile, you have to basically be aware of just a few factors. So, factor number one, or sort of thing number one, aspect number one, multiplier, it's always 200, right? You cannot change it. A very important thing you have to sort of take into consideration is slippage. So, due to the nature of this asset, we have this very, as you can see, all green candlesticks are of the same size, right? There is no variation. They all come in the same sort of shape and color. It's always green. It's always of the same size. Well, maybe, no, yeah, it's all the same size, right? Even if there is any difference, it's like it's so mild that you don't really notice, like less than 1%. At the same time, the red candlesticks, they can vary in size, and some of them can be pretty significant, like this one. And when market crash happens in reality, so usually when that happens, you have the so-called slippage. Right, so let me start off with my trades. My first trade will be upwards. So I'm going to basically explain a few different approaches. So, as always, a little disclaimer here. I'm not going to provide you one best strategy that is working, because such a thing doesn't exist. It's a, from that movie, it's a fugazi. It's not. It doesn't exist. It's not on the periodical table of elements. It doesn't exist. What exists is basically a mathematical approach and statistical approach to your trading. So, basically, what I'm going to show you right now, first of all, is there are going to be two scalping strategies, right? So, scalping strategies first, and then we'll talk about intraday strategies and maybe even mid-term strategies. So, what you do in scalping, basically, notice my percentage. It's plus 5% at the beginning of this candlestick. So, what I'm trying to explain, what I'm trying to show you, to demonstrate to you, is that every candlestick, every green candlestick, every candlestick of growth basically reflects or corresponds to plus, I think it's plus 13%, almost 14% increase in value given the 200 multiplier. And one of the easiest trading strategies you can use is to do this so-called counter trend, counter crash. Yeah, let's call it CCS, counter crash strategy. Yeah, let's call it that. It's gonna go by nickname of CCS, counter crash strategy. So after every crash, as you can see, almost always you have a series of green candlesticks, and sometimes these candlesticks, there can be 7 of them, sometimes it's just 2, sometimes it's 4, sometimes it's 6, sometimes like, I don't know, I think it's like almost 15, and sometimes depending on the trend there can be like 1, 2, 3, 4, 5 waves of more than 10. So I'm not really here to tell you the kind of like the magic number, how many candlesticks usually, how many green candlesticks follow the each red candlestick, because this number varies, and you don't really have these kind of numbers. I mean, like, this number is kind of random because sometimes, as I said, you have 2, sometimes you have 3, sometimes it's 5. So it's up to you, my dear traders, to decide which one to use. So some traders use, you can use, I mean, you can close after 1, 2, 3. So 3, yeah, 3 full candlesticks mean plus 30%. Oh, we also have the commission, right? So considering commission, so it's almost, it's, so 1, 2, 3, 3 candlesticks equal plus 30%. So as you imagine, 10 candlesticks will be 10 green candlesticks will mean doubling your trade amount. Okay, so that is strategy number 1. So you sort of do this, and probably the main problem is the so-called slippage, because when a crash happens, since due to the nature of markets, so that's how markets work, when you have slippage, so in fact it will close not exactly with plus 40%, but it will close, probably I'm going to lose like, say, 30%. So the problem, or maybe the issue which you want as a trader to sort of figure out for yourself, is when to close these trades, because these such crashes, they happen just rapidly, instantly, swiftly. So you don't really have time to move your stop loss, and then you have the so-called slippage. Now that's a little bit of a problem with this, with up trades. Now at the same time, when you have down trades, since charts grow up slowly, you don't really have this problem, and you don't have any kind of slippage. All right, let's close this trade. Whew, plus 50%, nice. Now my next strategy will be the crash strategy. So let's call it crash strategy. So what I'm going to, what it's based upon, it's based upon basically the notion that there cannot be too many green candlesticks in a row. So for example, if you have like, how many was the longest one? Let's count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So we can have maybe 14 candlesticks in a row of green color, and usually they're followed by this drop. So what you use in this case, basically after probably 4 candlesticks, so usually 1 stop out, because stop out in this trade equals 50%. So 1 stop out means that I have just 4 green candlesticks. And what I'm going to do next, I'm going to basically re-enter position, but now use double amount. So it's kind of like I'm using martingale, but with this strategy, it is much safer to use martingale rather than with FTT mode of trading, because with this with this approach, with this asset, I will only be opening my next trades. I will only be opening my next trades after 4 additional candlesticks. So it means that in order to sort of reach step 7, which is like already quite far in the martingale ladder, that means that there has to be a sequence of, like, say, okay, 25 green candlesticks a minimum, which happens maybe once a day, or I don't know, like I haven't really found that like usually it's 20 maximum. I mean sometimes maybe, yeah, like this 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16 17. Okay, so it's around 20 21. So the idea with this counter, with this crash strategy, right? So we are actually anticipating this crash to happen. So we sort of wait for maybe, like, we sort of sit and watch, right? And we don't, I mean, like, trading is not so much about action. It's all about being able to sort of wait for your best trade. So we are basically sitting here, waiting for a trade to sort of arrive, the proper conditions, and then we open a trade. It is as simple as that. Like, you don't want to reinvent the bicycle, the wheel, right? Okay, so minus 42, and this is my final sort of candlestick with this trade. If it doesn't close with profits, then I will, if no crash happens, I will have to open a trade with a new candlestick. Okay, so these are scalping strategies, like basically 2 strategies for scalping, which I so far have figured out. All right, so minus 48. Okay, time to open my next trade. See, so basically it's almost I would say it's like almost 4 candlesticks, a little bit less. Now, how many green candlesticks we have in a row so far? It's like 1 2 3 4 5 6 7 8 9 10. So 10, it means that I still have, well, so it'll be before 20 candlesticks. I'm gonna need to multiply 800 like this, 320. So, and also I'm not losing the whole amount here. I'm only losing here in case it's a negative trade. I will only lose 50% because that's how this stop out thing works. So stop out value amount equals 50% here with this asset. That's an important thing. That's an important point to make. Okay. So guys, at the same time, right? So let's sort of forget about my current trade right now. We'll obviously get back to it, but let me go ahead and show my trades of today where I made plus 1000. And this is a strategy. I think I was using SMA 50. No, it wasn't so much based on SMA 50. It was based on the RSI. Oh yeah, look, the crash happens. Okay, so crash happens, and now I can either close my trade, or maybe I should wait because there might be another red candlestick. So maybe you shouldn't close trades so early, and you want to wait for the next one. See, that's how this strategy works. Okay, so right. So what was I talking about? I was talking about this some of my profitable trades earlier today. And yeah, basically the rules of technical analysis, they work. I mean, look at this. It's the RSI indicator. Bam, bam. And here is a beautiful trade. I think I didn't open a trade here, or maybe I didn't close it a little early. But this is the perfect divergence, because each next high on the RSI indicator is basically lower than the previous one, and at the same time on the chart we have this upwards push, and each consequent candlestick maximum is higher than the previous one. So all these patterns work. Next thing, double top, right? Double bottom in this case, right? So the price went down, there was a bounce, bounces downwards, boom, perfect double top formation. Didn't work the third time, but it was kind of there. Next thing, right? So we are still okay. So I'm continuing my downwards thing, right? Because we are in the downtrend, and the downtrend prevails, and we can use. So is it 50 or 20? It's 50, correct. So the 50 SMA works the same principle, right? We are, even though there are these false breakouts, the so-called bull traps. All right, wow, look, that's how it works, guys. It's boom, close this trade, making money. So it's called scalping, right? I'm not, I just don't have time to open any sort of mid-term trades right now because they take time. I'm gonna show you how many minutes I stayed in this one. So I opened it at 13:14. So that's 31 minutes I stayed in this trade. I put a stop loss, and I was expecting to sort of, but guys, the main principle is this. I close this trade, take plus 45%, and then off I go. And this is my resistance level, right? So we are here. This is the resistance level, right? The 50 SMA. It works. I mean, 20 SMA. Does it work? Yes, it does work. So you can build the beauty about the oldest, the most common indicator, which is called the simple moving average, is that you can really tune it to a very unique kind of periods. So it's all about experimenting, guys. Look, 75 looks great. Works great. We see this thing. Maybe another way to use the simple moving average here in this example is to basically maybe you want to so whenever we are like below this SMA, maybe we want to open only down trades, sort of. Once again, this SMA gives us the idea about which trend currently is here. So shall I open a trade now? Yes, I can still open a trade because I think we are very close to this 200 SMA. Sorry, it's now 50. The 50 SMA, and it acts as a resistance level. Just look at how the chart sort of, when it comes close, it drops. Come close, drop. Come close, drop, drop. Maybe if I were to sort of find the chart like I don't know, let's scroll it back. Like this one, well, I don't know how I would back it like this. So basically, I would definitely not pay much attention to the 50 SMA because it's so much under. I would definitely open either, I would probably open counter trades here. Pam, 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 pam. But at the same time, maybe when you see an uptrend like this strong, you wanna open up trades since it's an uptrend basically. And then another like resistance level. So you can also open multiple resistance levels here, right? It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 possible trades. And we are moving to our current time. Okay, so now I think that still the bear's pressure is still stronger than the buyer's pressure, but we are going to see. So someone says up. Maybe it's time to open up trades. I don't know. My current trade, my current idea is still that the RSI is stronger. sorry, the SMA 50 is a stronger kind of thing here. Do you guys have any questions about this strategy? I wonder. Does anyone want to share some thoughts? I mean, I sometimes do explain things a little bit too quickly, maybe, but here's the point. Let me just go ahead and repeat it again. It's all about. So we have this strategy called the Japanese Martin. The Japanese Martin, I think, it's called one of our basic strategies. And there we also count. We know that these green candlesticks, they usually come in pairs and multiple ones, like series. And then we have these red ones. They also sort of like they usually go together, like multiple trades all together. Yeah, that's how we look at markets. Right. So question for Mustafa here. So hi Thomas, how often you stay in FX trade, and do you always strike with 1 to 3 RRR? RRR stands for risk to reward ratio. Well, as I said, as I showed in my example, not necessarily, but look, I've been trading for like 10 years, right? After 10 years, you start applying creativity in some form. So, Euro USD, look, my initial stop loss here equaled 50%. And then I sort of moved it upwards, and my take profit is now 350. So it's not 1 to 3. It's in fact 1 to 7. Now I can close my trade, and it'll be 1 to 6. But I sort of like at least the minimum one. No, like 1 to 4 is not good. So 1 to 5, right? So 1 to 5 ratio, like that's going to be my guaranteed profit. Dogecoin, well, yeah, maybe have I not moved? Okay, so let's move. Boom. So yeah, that's a good question. I mean, I trade Forex a lot, and as I say, the longer you stay in trading, the more you have this tendency to switch, to sort of go to long-term trades, because you just get a little bit tired of FTT trades over time. I mean, I like trading. I like FTT trades as well, but it's just over time you sort of like once your like portfolio grows. Like FTT is great when you don't have that many resources, so you want to use them quickly because the turnover of funds on FTT is the fastest one. So you can actually make a lot of, even though you have a lot of risks, but FTT mode is the quickest way to grow your capital, to grow your money, right? And then after you have enough money, so say imagine you have like $200,000 in your account, in your account or an account, and if you can make plus 10% profits per month, that means $20,000, and then you can reinvest some of it, right? And you don't want to do like sometimes if you want to reach your goal, you need to take less action, even though it sounds a little bit counterintuitive, but over time you will understand it, because sometimes you don't want to do like too many trades, too much hustle, right? So sometimes you just stick with your initial sort of trades, and I don't know what I'm saying, but basically, yeah. Look, this ratio can vary, and just see what works for you. For me, 1 to 3. I mean, I can do that, but I notice that sometimes I just enter these beautiful trades where I can make 10 times my stop loss. So why would I wanna cut my profits so early? It's like entering Bitcoin at 20,000 and closing your position at 25,000, and now it's trading at 37. So it's a little bit like you're kind of taking the profits, but at the same time you're cutting your profits too early, and you're not giving enough like breathing room for your trades. You just close them too early. You want to stay in them for longer. Right, guys, that's going to be it for today. I will talk a little bit more, a little longer than originally wanted. So I do hope that you try this Crash 300 index. It's a very interesting asset. As I said, multiple strategies can be applied to it, all the classic patterns and all the classic indicators as well, and also as an additional thing, as an additional factor, you can also use it in this form of scalping, where you, I mean, like, it's basically, yeah, counting how many green candlesticks there can be in a row or how many red ones. So, and yeah, so this double top formation, all right, is it gonna be a break? Is gonna break it? So let's see. Looks like a resistance level. I don't know. 31. So my next trade will be in the amount of 800. So since I already started, let's count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 candlesticks. I definitely have. 3 goes here. Oh yeah, that's good. But what I also have to admit is that this trade is a little bit a counter trend. So before that, this was a clearly downtrend, and now, as you can see, this angle like is really kind of up. It's not down anymore. So the trend has changed. So maybe now, after the next crash on this on the Crash 300 index, I might want to open take down at 10,300. Yeah, well, 10,300, which Mr. Ganeshan Kwangat is saying that it's pretty much in just one candlestick away. So at the end of the current candlesticks, I'm gonna have to re-enter this position, this trade. So it's already minus 45, minus 6%. And but at the same time, a very important thing is that we don't have any slippage here, right? So maybe it's like, say, 20%, 20 cents. But with down trades, you don't have this problem of slippage, which is true for up trades. So just don't maybe jump into like big trades on this index, but first, like, look at its nature. I mean, I probably spent 2 days last week on Thursday, especially on Wednesday, Thursday. I really did many trades on this asset, and I was trying to figure out. So trading is all about like noticing these different patterns, different combinations, different setups, and then just sort of exploiting them, like when they tend to repeat, but they tend to repeat all the time, and these technical patterns, they work. And we are nearing this overbought area on the RSI indicator, which is also another confirmation for a down trade. So if this doesn't play out well, I'm gonna open this trade 1,600, and I have like at least 4 more trades before the 7th step. Yeah, the 7th step, and maybe even then you can still open, because these like crashes, they happen, and you can like really trade with them. So yeah, these are some market insights. Thank you, Edwin, for your comment. Ladies and gentlemen, good luck with your trades. I hope that you all like or love trading the way I do, and wishing you good luck. The more time you spend analyzing charts, not like over trading, but like analyzing charts and analyzing your trades, analyzing your stats. Wow, that's an interesting comment. Priyansh says FTT is better than Forex. Well, yeah, I mean, we also have stocks. Don't forget that we have stocks. You can trade stocks on our trading platform. Now it's only BMW which is open, but other ones will be open a little later. All right. Thanks a lot, guys. have a wonderful trading week. We have 4 big trading days, and also the weekend trading is also there. And wishing you wonderful results, wonderful profits, and see you soon. Bye bye.